What's going on, guys? This is Foresight Capital, and today we're going to talk about Palantir and the healthy pullback that it had today and what that means for the trade moving forward. We've been following Palantir for about 2 weeks now, and the trade has pretty much played out exactly as expected. You all love these videos, so I wanted to give an update. Today, Palantir closed down about 7% to about $26.63 on the day, and is down in aftermarket hours to about 26.43 to 26.30. There's a pretty wide bid-ask spread right now in aftermarket hours, so we've seen the price move quite a bit, but overall somewhere in the 26.30 to 26.45 range. That represents a 7% discount realistically from where the price opened this morning and presents a good buying opportunity. So I received some emails and some comments on previous videos about where I think that Palantir is going to move next, and realistically it's been highlighted in previous videos, but I just kind of wanted to reiterate here that if anything, this pullback was healthy given the recent run-up that we had on the news of the couple of deals that Palantir has, both with the US FDA, which was pegged at about $44 million, and then the Greek government was just a bit more of a reaffirmation of a continuing partnership more so than a specific dollar amount. Now, if we kind of take a look at where Palantir has guided they'll be over the next year, they think that they'll have revenues of just under $1.1 billion. So that $44 million contract really only represents about 4% of their overall revenue for the year. However, on that news, Palantir actually spiked about 20% from roughly $23 to $24 per share all the way up to almost $31.50 per share. And that probably was a bit overextended. So what we've seen is a little bit of consolidation and a healthy pullback to levels that I think we realistically need to revisit before breaking all-time highs again. In fact, a couple of videos ago I said that I didn't think we would continue the run and would instead see some consolidation. However, I did think that this red line here, which is about the $27.70 per share range, would hold as support, because I thought ultimately that the bulls were going to kind of push this thing towards all-time highs over the next week or so. And while that still can happen, we've actually seen a breach of that line. We had a couple of full hourly candles close below and a full day's close below this overall 2770-ish support range. Now, if we zoom out to the 1-year trend, we can see that we held that almost exactly. So the price fell down. It pretty much touched the long-term trend line on the 1-year daily chart and then bounced right back, which is good news for the stock because that tends to mean that bears aren't really going to be able to push this down any further, at least in the short term. But if we take a look back at the 20-day 1-hour chart, I can see just a little bit of downside potential for this stock. The next level that we realistically want to look for is the $24.55 per share range, plus or minus a couple of cents at this yellow support line. That would represent about $2 per share off of the current price, or just under 10% discounts. So there's still a good potential for the stock to fall a little bit more. You definitely could be buying at these levels if you think that you're long-term bullish on the stock, but if you need to get a little bit of a discount or protect your capital just a little bit more heavily, I realistically think we're going to see at least a continuation of this downtrend that we've seen here, and that's realistically healthy. In fact, if we pull up the Fibonacci here on this and we use this candle here as kind of the start of a new trend, and we go up to the top of this candle was about 31.24, we can see that it's following that almost exactly. We had a bit of a sell-off, some consolidation between the 38.2% and 23.6% retracement lines. We dropped a little bit more, had just a 1-hour consolidation between 50 and 61.8, fell and consolidated, and now we're trading and bounced off of the 78.6% retracement line, which acted as kind of an interim support in between the 27.67 and 24.55 support lines. Now, we haven't quite broken back above this 61.8% retracement line, and a lot of people consider that as kind of the big number. So you've got all of these different levels of support and resistance that can be created by drawing out a Fibonacci sequence, but one of the biggest ones is 61.8%. So what we would be looking for in early morning hours, if we're going to stop the bearish trend that we've started here over the past couple of trading hours, is realistically to break above and close a couple candles above this line, and then we'll worry about 27.67 as kind of the next price point, which has been both support and resistance in the not so distant past. If we don't break above that line, we're realistically probably going to see the 200 period moving average, which is this red line, or the long-term support line that we've kind of established on this 20-day 1 hour chart that we've got going on. So I hate to be so wishy-washy with the price. I realistically think we're probably going to see this range again, though, a little bit of a discount from where we currently are. I wouldn't necessarily panic sell if you see the sell-off to that range. If you need to protect your capital, of course, it's possible for you to sell and then buy back at about a 10% discount. If you're a long-term holder of this stock, though, maybe you just kind of hang on and see what happens around the 200 period moving average or the long-term trend, because I think that we're going there. That's a little bit of a flip-flop from what I said a couple of days ago. I thought during this kind of consolidation pattern that we were realistically going to hold this 27.67 level. And so I said that over the next couple of trading days, I could realistically see us heading to all-time highs. That didn't hold true, and that's part of being a trader. Especially if you're trading on such a short-term window, you have to be a little bit flexible with your plan. Not always is it going to hold true, and you have to have contingencies. And that's why we have all of these different price levels that we want to watch. It can get a little bit cumbersome to have more than 3 or 4, but you just pick out the primary price targets, which haven't really changed throughout the entire coverage of this stock. We've always said that 27.70, 24.55 and 22.60 are big price levels, and I don't know that we'll ever see the orange or blue lines again of $18 or $14. I hope we don't, personally, because I am bullish on the stock, but we have to pay attention to those as well. So just kind of how I think it'll play out over probably Thursday morning and maybe even Friday, depending on how much volume is going on in the stock. I think we're going to kind of revisit these lines. So realistically, in the $25 to $24.50 per share range, we've got 2 to 3 different levels of support between the 200 period moving average, the long-term trend, and this yellow support line that are going to give us some pretty strong support. And if we break that, of course, we're heading down probably to the green range. I, again, don't think that we're going to see that much of a decline in the price. If anything, this was a healthy pullback from basically the overextension that we got. Remember, I said that it's only 4% of next year's revenues, but the price increased 20%. It doesn't make sense. And while this stock seems to have been removed from reality a lot of the times, it still has to follow some sort of pricing methodology, and I think that it was just a bit overextended. However, if they continue to have good news or don't have any bad news come out, I could definitely see the stock continue a general uptrend, but it can't just all happen in one day without some sort of correction back to a more reasonable price. And that's what we saw. So I hope that this video brought you some value. If it did, give the video a thumbs up and consider subscribing. I'll keep making updates as I see necessary on this stock. And I've also started a new series on Jumio, which went on a little bit of a sale today as well, as a lot of the S&P stocks did within the market. So a lot of great sales out there on stocks if you're looking to buy the dip and hold long term. Thanks for stopping by, and catch you in the next one.